Hello everyone, this is Henry Liu. I'm the author of Currency Strength Meter, and today I'm going to share with you some of the best kept profit tricks for the Currency Strength Meter. And it is in my opinion that this video is a must-see for all CSM users. Now, let me give you a little background on why I decided to make this video. Ever since the release of my Currency Strength Meter for about 2 years ago, I've been getting emails daily. Now, most of these emails are just supports, asking questions about how to use the meter and what have you. But every now and then I do get some thank you emails, which I'm very grateful. And even rarer, sometimes I do get some traders sharing with me how they're using the meter to make consistent profit. And this is what this video is all about. Consistent profit with the Currency Strength Meter. And I feel that that information is extremely valuable for everyone, and I decided to share that right here in this quick video. Now, if you haven't had a chance to watch my 7 best uses to profit from Currency Strength Meter video, which is a video that I made about a year ago, I would definitely recommend that you go ahead and watch that after you finish with this video. Because in the 7 best uses video, I talk about some of the basics for the Currency Strength Meter, and I think it will give you an excellent foundation on understanding of the meters before you try to apply some of the best kept profit tricks I'm going to share with you here. So definitely, when you have a chance, watch that 7 best uses video first. And of course, I want to also take this opportunity to give you a quick overview, a sneak peek of the upcoming version of the Currency Strength Meter. This little screenshot that you're seeing right here is the new meter, and it should be available next week before April 1st. And as always, it's going to be free of charge, and there are a lot of new features being added to this new meter, including alarms, which is something that everyone has been asking. Basically when a meter reaches a certain level, they want to hear audible alarms. That's going to be added. That's being added already. And of course the news feeds, which I think is extremely important with the way that the market is going, and recently what's going on in Japan and what's happening in Libya. All of those things are extremely important for us traders, and this is a quick news feed that is going to definitely help anyone that trade Forex market. And without further ado, let's just dive right into some of the best kept tricks to use the Currency Strength Meter. Now, the first trick is what I call a daily reversal trade. This was shared with me by a trader who looks at the market opening times. Basically what he does, he looks at the European market open at 3 a.m. in the morning, and then he looks at the 9:30 a.m. US market open. During these market openings, we do see a lot of volatility, and what he does is he will take a reversal trade. So he usually looks for a strong currency versus a weak currency. So in the case that we're seeing here, we're seeing a Australian dollar showing about a 7, and we're seeing a 1.3 for the Canadian dollar. Right? So what he would do is just around the opening, let's say for 3 a.m., he would look to take a reversal trade. So instead of going for the strong, he will be selling the strong. So he will be doing a sell Aldi cat. And he usually looks for anywhere from 20 to 50 pips of profit during this time. And he will take the trade, will be very methodical. And if the market goes his way, he picks out his 20 pips, he's done for that session. And he comes back again around the New York Open and look at the meter and try to do it again. Now, of course, he pays close attention, as with everyone who knows how I trade and knows the way that I analyze the market. We always pay attention to news, and we always pay attention to fundamental developments. And of course, this gentleman, he pays attention to what's going on in the market. And if there's something that's going on that's basically driving the market, he wouldn't take trades like this. But he will take them when there are no driving force in the market, and just during normal daily market moves, he will take those trades, especially just around the 3 a.m. market opening and 9:30 a.m. Market opening in the US. So this is one of those tricks that's pretty much like a revelation to me, because he was able to generate a lot of consistent trades almost on a daily basis, and this is twice a day. And really, when you are trading profitably, you don't need to be trading taking 30-40 trades. If you can take 2 trades, 2 chances to trade, and if you see the market developing during those times and you take those trades, you make your pips and then you're out, in and out. I think that's the most efficient way of trading. So that's trick number 1. Now the second trick is what I call the morning after trade. Now this trick is also shared with me by another trader. What this gentleman does is that he will scan the daily charts and look for excessive moves during the previous days. And when we're talking about excessive moves, we're talking about, depending on the pair, of course. If you're looking at the, let's say the pound-yen pair, usually that pair could move anywhere from 200 to 400 pips. So what he would be looking for is at least 200-300 pips of movement before he call it excessive. But let's say if you look at the Japanese yen, the dollar-yen pair, then sometimes 100 pips is already considered excessive. So you really have to look at the chart. You have to understand what pair you're looking at, of course. And he will look at that pair, and then he will see any kind of excessive moves. And if the move has been excessive, he determines that the move has been a lot from the previous day. Because if you just go to the daily chart, you can look at those big candles. And basically with those big candles, let me see if I can show you something right here. Alright, so basically what we're seeing here is a pound yen chart, and what he's looking at basically is a huge candle like this. Now of course, you see a huge candle going down for the daily chart. This is 200 pips, and right here what we're seeing, this is of course 700 pips. That's just crazy. So what he would do is he would look for these huge movements. Of course, not this day, not the 20th of March, which you only have a candle of about 26 pips. What he's looking for is at least a huge movement, like 250 or something. And once the market closes and opens for the next day, he would be looking at the meter to see if there's any kind of reversal developing, meaning that the strength that he saw in the previous day is starting to reverse. If he sees that, he would take a reversal trade, and basically he would reversing previous day. So what he's looking for is for the market to consolidate, to make a correction from previous day's excessive move. So if one day the market has been very strong, the very next day he's looking for the market to be very weak for that currency pair. And in order for him to jump in to take that reversal trade, he uses the meter during the Asian session, and he wants to see that the market is already showing signs of reversal, and he will go with that reversal trend for that day. So in essence, he's going with the trend, he's buying the strong, and he's selling the weak. So that's pretty much what he's doing. So this is what we call the morning after. It's the morning after the excessive move, and market has already realized that the move was excessive, and now correction is coming, profit takers are coming back to the market, and he's looking for that kind of reversal, and he looks for it during the Asian session when the meter shows that the market is reversing, and he will jump in and you hold on to the trade. Sometimes you will hold on to the trade for the entire day, and he will see a lot of profits. But of course, not every day we see excessive moves. So it's not jumping every day to trade with this special trick. But especially a strong day, that's not being driven by a change of the fundamental news. Then he will jump in and he will pick up sometimes several hundred pips. So this is a very, in my opinion, very useful trick, especially when you know what you're looking at after. So once again, this trick he uses during the Asian session, basically from 5 p.m. US Eastern Time all the way till about 1 a.m. US Eastern Time. So he looks at during that time for a consensus in the market on the meter to show a complete different trend as the day before. And the day before has to be a very strong trend, and he will just jump in and you hold on to the trade, because the next 2 sessions, the European and the US session, he will expect some exaggerated and accelerated move towards against the previous day's session. So I hope I explained that correctly, but this kind of setup, this kind of trade usually is during the Asian session that he will enter, and he will always look at what happened the previous day, looking at the daily chart. If the previous day it was excessively moving up, he would be looking to sell. If the previous day was excessively down, he was looking to buy using this trick. Alright, so the third trick is the persistent trend follower. That's what I call it. It's also shared with me by a trader, but he happens to be my mastermind mentoring student. And what he does is that he follows my weekly outlook. And for those of you who don't know, I publish a report where I summarize what happened during the previous week, and then I would take that report and put everything in context and look at what's likely to happen in the coming week. And I call this the weekly outlook. It is a subscription only report, and basically it's I talk about a lot of things in this report, and I think for people who really have to understand my trading method, or if you read this report you wouldn't benefit from it, so you really have to understand where I'm coming from. So this gentleman, basically, he says that he's been following my weekly outlook for about 6 months, and he started noticing that the meter is really playing a bigger role into his decision making. And what he does is that he will look at the report, and in the report I will talk about what is it I'm looking for, what direction I'm looking to trade, and he would trade only in that direction, and only after the meter would give him a confirmation. So let me show you what I wrote last week about this week's market condition. So basically I wrote that the MPC minutes is scheduled to be released this week. We could see some strength in the Great British Pound as traders look for at least 3 votes for rate hike. If we do get a 4 votes out of the total 9 votes, meaning that Governor Mervyn King casted the deciding vote, we could see a speculation of a rate hike rise, and further gains in the sterling is also expected. Of course, the general trend is still going to be driven by news out of Japan and Libya. That's exactly what's happening lately, of course. But as far as fundamental outlook for GBP is concerned, I'll definitely be looking to buy at dips. So that's what this guy is doing. What he's doing, based on what I've written here, is that he would always look to buy at dips. So he would use the currency meter to find out whenever the sterling is weak, and he would be buying it. Or he would be looking at whenever the sterling is strong, he would be buying it. So regardless of where the market is going, he would always be going just one direction, and he would use the meter to gauge his entry. So one of the ways to really use the meter is to basically determine the direction that you want to go. You know, when the sterling is weak and he buys it, we call that positioning, because he's positioning for a little long term. And when the market is putting pressure on sterling, he can actually get in at a much better position for those long-term trades. And when the market is going with the sterling, then he tries to jump in and try to match it with the weak currency. So what he does is buy strong, and basically he sell the weak one. So in this case, you know, of course, we'll see the sterling at 6 and the Canadian dollar at 1.3. So he will probably be looking to go long on the pound cat pair. Of course, that's not a pair that we usually trade, but you know, you could also trade the pound dollar, which is a 6.3, or you can trade the euro pound by selling the euro pound. So there's many ways to trade based on the strength meter, and as long as you know the direction of one of the currencies, and that's how he would follow. So that's what I call the persistent trend follower, and he would always look at the report to determine the general direction of the market. Once he determines the general direction of the market, then he goes to town looking at the meter, and he wait for the meter to give him the confirmation, and then he will jump in. So so far for him, he says he's been making consistent income with this way of trading, and I believe him because I see him taking very conservative trades, and basically, in my opinion, he's a very, very good trader. Without further ado, let's look at the next one. This is what I call the constant scalper. Now, this trader only trades during the London session, and I don't know if he doesn't trade the New York session, or because of he doesn't have the time, it's a different time zone for him, or he just traded but it wasn't very effective. But he tells me he only trades the London session, and he only trades 4 hours. So I think it's pretty much, I think because of his time, he only tried this during the London session. And he's very methodical with his scalping method. He uses a stop loss of 12 pips, and he goes after 10 pips for take profit. I know for those of you who are a lot into risk to reward ratios, you will say, oh, that's not a good risk to reward. But he does have one edge, which is the strength meter. So what he does is he looks for a difference of about 5 points between the weak and strong, and then if every time when he sees that difference, he will take the trade. And he would only trade pairs that have basically very, very low spread, such as the dollar yen, the euro dollar, dollar Swiss franc, and for some brokers he will use the pound dollar. And what he does is that he would take these trades, he would trade 4 hours, but it would be very heavy trading, especially during days when we have, you know, extremely strong movements. He would just jump in whenever he sees a difference of 5. He would jump in. In the example that we have here with this strength meter screenshot, you know, when you look at the only thing that we're seeing 5 is the Australian dollar versus the Canadian dollar, which is a 7 versus a 1.3. You know, so he would jump in on this trade, you know, on a 5.7 difference. He would jump in on this trade, and he would be buying the Audi, selling the cat. He will go long on the Audi cat pair, and he will hold out for 12 pips. So of course, this is of course a very high spread pair, so he will probably just skip it. So you know, he would look at, you know, the euro dollar, the dollar yen, and the dollar Swiss franc for his primary pair. So he doesn't get in every day, but when he does get in, he jump in and he picks up 12 pips, he closes the trade, and he looks for another entry. And if the market's trending, he will always be able to get in and get out, get in and get out. And so far, he has been reporting very consistent income. You know, sometimes when the market goes against him, he takes his loss, but he's always very methodical. When it's time to take his loss, he will take his loss without any hesitation. So of course, this is a very good trading for those of you who can be complete control of your emotion when you're trading. But for those of us who are, you know, sometimes you don't want to take a stop loss, you don't want to close a trade, and you're hoping that the market will come around, probably this is not a good trading method for you. But using the meter, he was always able to pinpoint the right strengths and weaknesses, and he'll be able to jump in and out of the trade. So that's one of the tricks that he's been using, and I feel that if this is a trading style that suits your trading, then might as well try it. All right. So thank you very much. This is Henry signing off. Bye bye.